Hi, everybody. My name's Anthony. I'm the co-founder of Stasher, and we're building the world's largest luggage storage network. It's not that often that I have to pitch directly back-to-back with a direct competitor. If it's going to be anyone, I'm glad it's Matthew. He's a nice guy. And at least he's done a lot of the legwork so you understand why our platform exists. But our story is a little different. I met my co-founder studying economics at Oxford several years ago, and after graduating, I was living between Euston and King's Cross, two of the busiest stations in Europe. And I always had people asking to leave their stuff in my home. It was at this point that we decided to set up a platform and allow people to store with us. And we realized a few things. There was a genuine need for Airbnb guests to store after checkout, hotel guests whose hotels were in inconvenient locations, transitors, and people going to events and venues that didn't allow luggage in. We also realized that businesses made way more sense than our homes. So that's how we came upon our current business model. We vet hosts all over the world, list them on our platform, and allow customers to book through our platform for £6, euros, dollars per bag, splitting it 50-50. There's obviously also the ancillary revenue, but the footfall and the brand awareness, and we ensure all bookings on our platform. So normally this is pretty novel and exciting. I think in today's context, less so. The real question you have at mind, why is Stasher going to win this space? I think the most important point that we can start with is that, as it stands, we actually are winning this space. We're about a third larger than the second largest player and almost twice the size of the third largest player. These are stats that are easily available on online traffic tools and that you can search for yourself. Importantly, our paid search is the lowest percentage compared to anyone else, and it's a dangerous channel to be reliant on. Where is our traffic coming from? From partners. That's why we're here today. Because we work with travel partners who refer their customers at point of need and trust the customer experience that we can offer. There's a wide range of them, but particularly we work with a lot of vacation rental managers, over 100 around the world, but some of the big ones you might recognize would be Sonder, One Fine Stay, and most recently we've signed with Marriott Homes and Villas. We also do large co-branding campaigns, we're launching one with Klook in the coming weeks, and major API integrations with the likes of Hotels.com and Visa Korea, with several more to come. So this is the demand side of our marketplace. Now about the supply side. We're in over 250 cities around the world, and we partner with quality brands. We have over 200 Premier Inns, a trial with Oyo, and a bespoke API integration with Accor. And the important thing about these integrations and relationships is that they are directly with head offices and regional managers. This isn't just signing up local shops and saying that we are exclusively with them. These are genuinely exclusive relationships. In the 250 cities that we're in, we have chosen quality over quantity, and we try to balance supply and demand because we care about the customer experience. In answer to something that you guys were talking about earlier about how do we maintain that experience, you need to have many hosts. It's not a good experience to have one or two, and ultimately, if they haven't had many bookings, they're not going to be familiar with your platform. So this is foundational to us, trust and customer experience. We think that customer NPS and host NPS are the best indicator that you're really adding value, and that's the best indicator that you have a midterm business. That's why we're the only platform in our space to put our money where our mouth is and use a third-party verified review platform as the only reviews on our website. That means you know we're not hiding the negative ones and that all of the positive ones are genuine. And it creates a feedback loop within the business whereby we have to respond to criteria and negative criticism to improve the experience continually. And ultimately, modern consumers are savvy anyway. So if you're hiding negative reviews or not giving people as good an opportunity as possible to give you feedback, they will find a way to let you know. Trustpilot, a platform that all of us are present on. 1% of our reviews on Trustpilot are 1 out of 5. Comparing with competitors, 10% are 1 out of 5. These are active detractors. And in some cases, 83% of reviews on Trustpilot are 1 out of 5. And these are a large number of reviews. So we really care about this. And this focus on customer experience has led to some excellent traction. We're more than tripling year on year. And in the era of WeWork and Uber, it's important to clarify that this is healthy growth. We're actually improving our unit economics. CACs are down 33%, and we are unit profitable. As a result of this, we've brought on board some of the most valuable strategic financial backing in the space. We have Howsat partners, first investors in Trivago, owner-operators of Momondo Group, venture friends, first investors in Blueground, and angels who are ex-C-suite from Hotels.com, as well as investment from Telefonica. This perfectly positions us to capture the huge opportunity in front of us. There are about 1 billion vacation rental guests checking out of urban vacation rentals per year. And ultimately, with a model that's as scalable as ours, if you're staying at an Airbnb in an urban area, you should have the option of storing with a Stasher. And when we have this global network of hundreds of thousands of points, there are so many more services that we can add on top, whether that's in travel, be it key exchange, operational storage for partners, or luggage delivery. We can also actually work with logistics providers to give them distributed storage options via API. This is a seamless travel and logistics experience that started with 2 college roommates storing bags in their apartments.
Thank you, Anthony.
All right, so just you make $3. It costs you something to acquire that customer. It's a leisure traveler, right, who travels once or twice a year. And if you store 10 million bags, you might make a couple million in EBITDA. I mean, why is this interesting?
So first of all, as we said, there's a huge market of people in vacation rental. So it's a much larger market.
All right, well, yeah, but I mean, how many of those actually need to store a bag?
So actually, with the vacation rental partners that we work with, the conversion rates are high double digits. So we're talking like a quarter of their guests. Actually, Airbnb, similar booking platforms are predominantly urban, predominantly major cities in Europe and America.
So your experience so far is 25% of the guests that are staying in those kinds of places are using your service?
Yes. Yes, exactly. So it's actually a really meaningful number. And importantly, it's an industry that's growing really quickly, right? I mean, Airbnb quotes 2 million average, 4 million peak, and they're growing double digits per year. I mean, if I remember correctly, Airbnb had more room nights than Expedia last quarter. So to say that we sell to vacation rental is tantamount to people saying, I sell to hotels, which is by no means, oh, that's a small niche market.
Well, growth is good, and I'll go back to what Chris was saying.
Yep.
Where's the EBITDA? I mean, if you don't have margin in this space, and you're taking on the risk, I mean, you got 1 in 10 saying, I don't like this service. So you got low margin.
That was 1 in 100.
1 in 100, okay.
Yes, our NPS is actually 8.
Forgive me. Okay, so, but still a relatively, well, it's a higher percentage of people on the detractor side, from my perspective. You're owning the bags, the risk of that, low margins. What's the monetary payoff here? I'm there.
So the margin, I mean, really, in real terms, is 50% minus CACs, which are hugely decreasing. As I said, we're unit profitable. And then the operating costs are practically nil. Because we're operating through this B2B2C channel and helping travel partners who have genuine operational needs and customer experience, like improvements that we're trying to make, we can actually acquire customers for really small fees. I mean, if I go to a vacation rental manager who has customers asking for this, and they actually aren't providing anything, I could practically do it for free.
No, I got it. One last thing before, real quick. However, you just said travel.
Yes.
I keep wondering, why aren't you going for a broader group beyond travel, like logistics? I mean, there are lockers, there are all sorts of out here if you've got a unique piece. So I don't want to take us off travel, but I'm still curious about that.
Yes, so to address that really quickly, this is a travel conference. We have a clear travel use case, and we as co-founders have always taken the opinion that it makes sense to take a use case that you can clearly communicate, build the value in your business, and then expand. I can say that we are talking with postal partners about the option of using our logistics network via commercial API to actually distribute storage for last mile delivery and logistics. So it's absolutely a space that we're looking at. There's a huge opportunity there, but this is a travel conference.
Yeah. So staying on the travel thing, though, you have my attention immediately pre-trip as a user. Is all you're going to do try to just store my bag for me, or is there more than just bags?
There's more than just bags. So ultimately, if we have these spaces that are trusted, we can actually kind of bridge that gap between vacation rental and hotels and provide that concierge experience. It's very easy for us to move into key exchange. I mean, it's pretty trivial to move into luggage delivery. You just use the API of a postage partner and use your points as the drop-off and pickup. There's a lot more that we can do. This is really just a base to build a big network from.
Okay.
Thank you very much, Anthony.
Very good.
Nice one.
Well done.